Many investors are also like many founders, where they're copiers, right? I mean, how many times do you see a founder that's like, I'm doing Uber 2.0, I'm doing, Atrium 2.0, I'm doing Carta 2.0. Like it's, and there's some value in the analogy and just helping the communication, but it's very rare to see really important companies get built by copying another company that's already been built. It just doesn't happen that often.
At CartaX Ventures, our podcast, Advancing VC, covers all things startup and venture capital, primarily how venture capital is changing from the emerging manager perspective. We'll be talking with venture capitalists, limited partners, and founders who are actively working at the frontiers of our industry and are advancing venture capital. Today, our guest is Henry Ward, a Marine Corps veteran, an innovator, an angel investor, and the CEO and co-founder of Carta. Henry and Carta have transformed the startup and venture capital industry, first with cap table products, and now with fund administration for venture capital firms. Carta is trusted by over 40,000 companies, over 7,000 investment funds and SPVs, and over 2 million equity holders to manage cap tables, compensation, valuations, liquidity, and more. We've interviewed several fantastic guests, but I'm especially eager to interview Henry today alongside Neil Devani of Necessary Ventures, a friend of the firm and collaborator and co-founder of our annual Diverse VC conference. Lastly, I'm really eager because Henry has graciously taken the time to join our annual Military Veteran Startup Conference for the past 2 years, and attendees have personally told me that his sessions have been the most thoughtful, honest, and inspirational. Thank you, Henry, so much for joining us.
Thanks, Tim. Thanks for having me.
So we have so much to cover, and I'm going to jump right into it. How has the startup and venture capital landscape changed since you started Carta?
It's so much bigger. I moved to Mountain View in 2011, and back then, startups was a hacker culture out of Mountain View and Palo Alto. And I remember we used to go to, there's this place, I don't think it exists anymore, called the Hacker Dojo in Mountain View, where everybody, we also used to go and just build stuff, and people would be building all sorts of different things, and just seems so very small and niche, and it was like a small community of founders, just hackers, just trying to build stuff. Now it feels very institutional. Like you go to a YC or a Techstars, or you do pre-seed. Like it's just very structured, which is great. It's got a lot of scale to it. It's super exciting. There's so much attention to it. Back when I started, if you raised a Series A round, that was big news on TechCrunch. That would get covered. I remember when I started, nobody announced the size of the rounds. Like it was considered super private. And I think eShares, we were the first to do it, because I remember TechCrunch reporters saying, we'll publish this thing. And I said, hey, we raised $1.8 million seed. Can you put that in there? And they're like, really? I said, yes, put it in. I want everybody to know, And I think that kind of changed the industry. Like everybody now does it. In our Series A, we published not just the amount we raised, but our price. So yeah, it was a smaller universe back then.
And how has cap table management changed since starting Carta? Or eShares?
Yeah. Back then it was all done in spreadsheets. It was all done with lawyers. Most companies now, they may start on spreadsheets, but they quickly put it on software. Hopefully it's Carta, but could be anything else. There's lots of providers out there. What a lot of people probably miss on the cap table side is the category is called cap table software. But startups don't buy Carta for the software, cap table software. What they buy it for is everything that bolts onto it. So they buy it for 409A valuations, expense accounting, issuance. Like the cap table management's actually the easiest part of it. It's everything else that you do when you finally get the cap table in the software. And so that's the big difference. Is it used to be that sort of managing a cap table was done by law firms. 409As were done by valuation firms. Expense accounting was done by accounting firms. Like there were different firms for every piece of running the capital structure of a company. And then what we really did was, because we could, use my favorite word, dematerialize the cap table and put it in the cloud, we could converge all of these different services into one place. And that's why people bought cap table software.
You found a way to make law firms love you as well, and law firms are generally not very excited about software that makes them more efficient. There's a bit of a tension, a misalignment of interests. How did you guys make law firms also be excited about this, given that, and in a way where is it product driven, or was there something more to it than just building great product?
It was terrible. It was a war. They did not come willingly. They hated us, and so how it worked was. We first tried to sell law firms. They wouldn't have any of it. So then we went direct to startups, and we started selling our software to startups. And the first thing the startup would say, the founder would say, is, well, let me check with my law firm. And then the law firm would say, no. Don't trust them. We don't know. Like, no. And so the founder would call me back and say, sorry, Henry, my law firm said no. And so then I would say, oh, well, that's because they want to charge you more money. And the founder go, really? I go, yeah. You said they charge you $800 an hour. Now it's like $2,000. They just want to rack it up, and they don't want you to have the software. And you sort of plant that seed of doubt in the founder. And then they start questioning everything. And you call the founder back and I said, did you get your first legal bill? And they go, yeah, it was horrendous. So you should really get on Carta software. So they start. And then the lawyer goes, no. And it starts to become a battle. And I can get the founder to go, well, I think it's because you're charging me, right? And then the lawyers would be furious, right? You understand now why they hated us. So then I would call the lawyer and I would say, hey, every startup I talk to that's want to come here, and they're going to check with you. I know they will. If you say no, I'm going to tell them that you are ripping them off. And I'm going to recommend that they go to one of my other lawyers that likes Carta because it saves them money. But if you say we like Carta, I'll say we like you and that you're trained and all this kind of stuff. And you can imagine how those conversations, I mean, lawyers are super, but that was the trade. And you just had to keep forcing that motion. And eventually you hit a tipping point where it would start to converge. The battle, I mean, it was the bloodiest thing we've ever done at Carta, was to win the law firms over.
What's fascinating about Carta and startups generally is how global it's gotten. And you all, I believe, have offices in Dubai, London, and Singapore now. And I'm guessing you all support the startup ecosystem globally. Have you seen that explosion on startups globally reflective on Carta's business?
I remember the board meeting in 2022 coming out of COVID. We were starting to see sort of international Carta companies start to emerge. There's like Capdesk and Quotabook in Korea and all these different regional local players emerge. My board said, hey, don't let a competitor lock in one of these regions. Carta should be a global company, get on a plane and go figure out international. So I did. 2022 and 23, I was on a plane constantly flying around the world, learning about these different markets. We ended up buying two companies in London, Capdesk and Valbon, which were sort of a cap table and SPV provider for Europe. We invested in a bunch of them, including Quotabook, Andy's company in Korea, Raise, which is Martin's company in Africa. It's the Carta of Africa. We opened an office in Singapore. We opened an office in Abu Dhabi. We're now opening an office next quarter in Luxembourg. So we've quickly, over the last two and a half years, expanded dramatically internationally. And it's super exciting because we're a little bit like we were on the ground floor of venture in the United States as it started to explode over the last decade, when we started the company in 2012, 13. We feel like we're at the ground floor of all these emerging markets as venture communities start to expand. And so we think we're in a good spot. As these markets grow, we will be well poised to help them do that.
A growing business line that I find fascinating about Carta, because you all start with cap table management, is your fund administration product. Can you talk about how that started and how it's evolved?
Yeah, 100%. So it's such an interesting story because we started with this cap table problem, and the thesis of Carta had always been two chapters: win cap tables so you could become a settlement database, and then build a stock market on top of that. That was always the thing. And the stock market idea didn't work out like I hoped. But along that journey, in about 2019-20, by then almost every U.S. venture fund had some exposure to Carta at that point. And we were talking to all these venture funds, and I was asking them, what are your biggest problems? Like, how do you deal with this? And they're like, I have this fund administrator that I email instructions to. They manage my accounting, and they email me a spreadsheet back, when I need it. And it's just like back and forth spreadsheets. And the source of truth is actually all the paperwork and my LPA, my capital calls, my commitments, all this stuff. But like everything's recorded in a spreadsheet. And I was like, wow, that problem sounds really familiar. That's just like cap tables in 2014. I said, I think we can help. And so we started building this fund accounting software. And if I knew now what I know then, I never would have done it because it's really hard. It's really hard. Compared to cap table management, fund accounting is, quantum physics. But, once we're in, we couldn't get out. And that business, we launched that business in 2020, Q1 of 2020, end of 2019, just grew faster than the cap tables. It just flew off the shelves. And we said, wow, we're onto something. And what really worked, I think two things really worked. One is just like with cap tables, we moved fund accounting into the cloud, which nobody had done before. And then second, what gave us even more unfair advantage in that market is because we had the cap table, we could connect it to the accounting system. And we call it an ERP, like a network ERP for private capital, where you can connect the asset to the fund that owns it to the LP that invests in the fund. And that message worked extremely well. And I would say in a world now without a private stock market, for us, the future is building all of the components that connect private capital together.
I think your fund administration product has been revolutionary for solo emerging managers like Neil and myself, because it's abstracted or dematerialized the complexity of running a fund. Otherwise, it would be so expensive to run a fund. There's so much back office you need to do. And now, as solo emerging managers, you can focus on what you're supposed to be doing is sourcing, selecting, supporting. Any thoughts on that?
Yeah, 100%. The reason I love fund accounting, and you said, Tim, like the emerging manager, which is like if the founder is the heart and soul of our cap table business, the emerging manager is the heart and soul of our fund admin business. We started the cap table business with the idea that we wanted to lower the cost of starting a company. Everybody was lowering the costs of AWS and open source software, and just like it got so much cheaper to start a company, but nobody solved the legal cost of starting a company, and most of the legal cost was actually the cap table. Then when you look at starting a fund, we wanted to lower the cost of entry to start a fund. So, anybody can do it. And in 2020, when we launched, it costs about $150,000 in legal fees and minimum 50 for most funds, 75 to 100K a year in back office to run a fund. And so we looked at that and said, can we 10x or reduce it by 10 times? And so we actually have our own formations team. So instead of going to a law firm and paying $150,000 for fund formation, we'll do it for you for 20. And we'll do all the docs, we'll do everything for you. So we'll set the fund up. We call it fund in a box. You come with an emerging manager, create a fund in the box for you, we'll form the fund for you, and then we can do fund administration for the smallest funds for as low as $20,000 a year, which dramatically increased, the number of emerging managers. And, I say this hopefully humbly, but we think we were part of the explosion of startups from circa 2014 to 20 to 22 because it became so much cheaper. You didn't have to pay $50,000 for a law firm to do your cap table. You could come to us for $3,000. And we think the explosion of emerging managers from 2021 to 2024, we think is in large part enabled because we reduced the cost so much to start one.
What I find fascinating is you all then also did some investing into funds, which is interesting to better understand your customers, in my opinion. And just like the cap table product where you've layered on other products for your fund admin, most recently I've signed up for your tax product. And so it's fascinating to see you all add products or bundle products onto it. Thoughts on the future of your fund admin business?
Yeah, it's so interesting. I love the tax story. So we now do K1s for our venture funds and to report to their LPs. And the analogy I use is, and what a lot of people don't realize about cap tables is we launched in January 2014 for cap tables. By March, we had these 498 firms call and say, hey, our customers would call and say, hey, can you send my 498 valuation firm my cap tables so that we can do our 498 valuation? And we're looking at it and we're like, what's a 498 valuation? So we're on Wikipedia learning about this. And they'd send it 2 months later, they'd get a valuation report back to us, and we'd give it to the customer. And they charge $10,000 for this 49A report. And we're like, we should just do it. It's just a math problem on the cap table. And whenever there's a problem in the 49A, it's because of the translation of the cap table into their 49A calculator that calculates it. And so if we connected the 49A with the cap table software in one place, we could do these faster, cheaper, better, and without error. And that's what we did. And so it's hard to people that entered the venture space in the last few years don't remember what it was like. But back then, you had to get your cap table from your law firm and send it to your valuation firm. Now, Carta, everything's in one place, and it's 1/10 the cost of what it used to be because we bundled this. And today, this is like when I talk to founders or go to business schools and talk about markets that converge, this is one of those things that you could never have guessed back then that 49A and cap tables would converge. It's obvious now. Nobody believed it back then. Now, you can't be a cap table company without doing 49A, and you can't be a 49A company without doing cap table. They'll forever be intertwined. So fast forward, 2022 comes around, and we're doing all this fund accounting, and we're sending the data over to the tax companies to like put it in their tax calculator, and then they send us back the K1s. It takes 6 months to get it done, and any of the errors are in the import because our fund accounting's right, the tax calculators are right. It's always the transfer. And so we said, why don't we just pull this together and put it on one stack? And that's what we did. Now, our second year in, actually, it's January 13th. I think our first K1s are going out today for our customers. And I think in 3 years, you will see you can't be a fund accountant without doing taxes, and you can't do K1s without doing the fund accounting because they will be forever tied together.
So as we've studied Carta's business, you have mentioned several times that you are wanting to expand to other industries, not just startups and venture capital. That means private equity, maybe even real estate. And you've mentioned that for your cap table product. Do you think that might be true of your fund admin product too?
Yeah. What's really exciting about our fund admin product is that it's horizontally scalable across asset classes. So cap tables in its venture form doesn't really apply outside venture. We had to build a new product for private equity cap tables because it's a different structure. It's an LLC versus a C Corp. They have much more complicated capital structures. So we had to build a different product for them. And then private credit, it's a different problem set to understand the debt asset. So when you think about cap tables in venture, it's not horizontally scalable. But our fund accounting solution is. The same fund accounting solution that works for venture can work for PE, can work for private credit, can work for energy, renewables. Carta is going through a very big transition right now where we're taking this playbook of, hey, we can build software for a portfolio company to manage its investors. Then we can build software for the fund that owned the company to manage their investors, the LPs. Now we're taking that playbook and seeing if we can do it in private equity, private credit, all the alternative assets. And I think if we can't, we'll be the company that never escaped venture. And if we can, I think we can become not just the infrastructure that venture capital runs on, but the infrastructure that all private capital runs on.
I want to take a quick break to highlight today's podcast sponsor. And I want to also very transparent and say today's sponsor is Carta. However, we pay Carta. I find this to be very unique. And so CartaX Ventures, we're very happy customers with Carta. We're not for Carta's fund admin product, like I mentioned a few minutes ago. It would have been very difficult as a solo emerging manager to get CartaX Ventures up and running. For emerging managers who have not started a fund, the term fund administrator sounds boring, but it is critically important. I literally just wrote this in my investor update I sent a couple of days ago as my end of year 2024 Q4 update to my investors. I am in the midst of approving the financial statements for Q4 of 2024 on Carta and hope that they will be approved soon. As a friendly reminder, on Carta, our fund administrator, you can review all investments the fund has made, including how much the fund has invested in each startup and the date of the investments, all the fund's financials by quarter, how much you have committed to the fund and how much capital has been called, the valuation of each startup, and the portfolio fund's performance. Carta's fund admin team is great. If you've worked with John Lewis and other Carta teammates, then you likely already know what I mean. Here's a great example. As part of my end-of-year update, I also asked Carta before the weekend if they could send me a list of all the investments we've done to date and how much we invested, because I wanted to break that down by how much we had invested per year to show how rapid we are deploying capital. They did that within 24 hours. Carta's technology is also getting better every day. When I started with Carta, there was no mobile experience. However, now they have a mobile experience. I've handled fund admin tasks such as approving quarterly management fees while on a Waymo. And when I make capital calls, I can easily see who has fulfilled a capital call and when they fulfilled it. But wait, there's more. A few months ago, Carta asked if I wanted to use them for tax assistance while issuing out K1s. And as Henry just mentioned, my response was immediately yes. Prior to using Carta for taxes, I had to get Carta to send information to my tax preparer, but now it's less paperwork I need to review and improve. As an investor, I want to devote as much time as possible to sourcing, selecting, and supporting, and less time shuffling through paperwork. I'm a happy Carta customer, and there are thousands of other venture capitalists like me who rely on Carta. Now back to the program. Henry, I'm going to ask a tough question. CartaX, you wrote a blog post early last year about not pursuing that. However, I've also heard you on other podcasts talk about how Andreessen Horowitz says it's always about timing. I actually think CartaX is about timing, but you have written it's about trust and how you all own that data and how people might not trust if you all leverage that data. Thoughts on CartaX, and do you think it could be a timing thing that you revisit later?
My view on private market liquidity, after having worked on it for almost 10 years now, people know CartaX as the most well-known version, but I had two other versions of it that I tried and failed that didn't work either. So CartaX is my third and biggest swing that missed. Having gone through it, I could be the old guy that's given up, and there's a smarter, younger, brighter entrepreneur that's gonna solve this problem where I can't. So I'll say all of that. I've been beaten up too much, so I'm a biased observer. But my view on why I don't think a stock market, at least the way that we understand stock markets, will ever work in venture, is that it's a structural issue. It's not a timing issue. It's the structure of it's the microstructure of the market. And what I mean by that is when you think about marketplaces or exchanges, the value of that is value of a marketplace is liquidity and price discovery. That's the feature, and that's why everybody wants one. The problem is, in most markets, those are features. In private markets, it's a bug. CEOs do not want price discovery because it messes everything up. Like at the beginning of the year, we have a 498 price. We have a strike price. We set up all our comp plans on it. We set up all our investor values on. We set all our employees and issuance on this, right? If it starts to move, it messes up everything in how we run the company. And so we don't want price discovery. Private market CEOs, we're used to knowing the price of a transaction before we go into it, not after. And so I think price discovery is a bug. The second is liquidity. That liquidity is also a bug. It's not a feature in our market. And the reason is, by definition, venture-backed startups are always capital hungry, right? We always have to raise new capital for the balance sheet. So if we allow shareholders to have liquidity, we're now competing with our own shareholders for capital, which is why we all have transfer restrictions, which is why we do not allow shareholders to sell. Because if we're going to sell our startup stock in the open market, I want to be, as a CEO, I want to be the only seller. I don't want anybody else selling besides me, so I can optimize for the balance sheet. And so those are the two reasons that I just don't think it will ever work. I have ideas on actually how I do think we can inject liquidity, but I don't think it's going to be on cap tables. I think it's actually through people like you, through GPs. I actually think this concept of GP LP liquidity is the right starting point to inject liquidity into the venture ecosystem.
Is Carta active or considering getting active in facilitating tender offers, like company-led liquidity events?
Yeah, so we do a ton of tender offers. It's our bread and butter. And I would say tender offers is this unique product that solves my two problems with the market, right? The tender offer price is set, so you don't have price discovery. The price is set by the CEO when they run the tender. And two, it's really only done when after the company has filled up the balance sheet and there's an excess of demand. And so that solves the competing with my own shareholders. I'll only do it for excess demand, but I wouldn't do it until the balance sheet's done. And the tender offer, we do a ton of them, and that is the dominant form of employee liquidity. Yeah.
You have compared founders and product leaders as musicians that need to have not just be one hit wonder, but have a great album, but ideally have multiple platinum albums. Do you think you and your team are getting to that?
I would say we're getting better. It's really hard. It's hard to be a founder. It's hard to think of one product that gets product market fit and takes off. It's even harder to come up with two. And it's way harder to come up with a suite. I would say out of all the products I have tried, cap tables, CartaX, liquidity, the solutions, I've tried I've had a ton of songs. Two worked so far, cap tables and fund accounting, fund administration. Those two businesses products are working extremely well, and that's allowed us to tag on ancillary products. Do I have a third hit product in me? I hope so. At this rate, I'm about one every 5 years, so I might have to wait a little longer, but I hope I have another a great idea in me. But for people like us, when we can't think of good ideas, we try to find great entrepreneurs that can. And so we bought a company called Tactic, which does, think of it as like it's an early version of Anaplan, but for funds. How do I forecast a fund and track my forecast to actuals for a fund? An amazing entrepreneur named Anubhav, brilliant mind. It took me a year to convince him to merge his song with our record label. And he finally did it, and it's been amazing. Expect a lot more acquisitions this year and next year from us. That is half my time is spent now on corp dev.
Fascinating. The analogy you make to product leaders and entrepreneurs, we believe actually also applies to funds. Because as an emerging manager, your fund one should hopefully have one or two incredible hits, but you need to keep delivering the hits. And I'm curious, as a founder who engages with a lot of venture capitalists, what do you think makes for a great venture capitalist besides Mark Andreessen coming personally to your house, giving you a term sheet and Legos? What other factors?
Yeah, it's so interesting. I meet so many investors, and I would say many investors are also like many founders, where they're copiers, right? How many times do you see a founder that's like, I'm doing Uber 2.0, I'm doing, Atrium 2.0, I'm doing Carta 2.0. Like it's, and there's some value in the analogy and just helping the communication, but it's very rare to see really important companies get built by copying another company that's already been built. It just doesn't happen that often. I was actually just talking to a founder who's doing another version of a company that, and I just said you're going to be at best the number two, and number one isn't that big. Like it's big, but it's not big enough that number two is interesting, and it's much harder to build number two, and so that's why I would argue like. And then there's a lot of investors that I think are copiers. Like, oh, that worked. Let me invest in a copycat founder because I'm a copycat investor. And I think a lot of those investors, the reason you might ask, like, well, why would they do that? That doesn't make any sense. The reason is there's some investors that invest because they see something the world doesn't. A lot of investors mostly invest because they don't want to look stupid. And so if you invest in an idea that's proven, you can at least be, well, I'm not dumb. Like it was a good idea. The founder messed up, but to invest in something that's completely weird and new, right? And it doesn't work out, you look like an idiot to your peers. Like, why would you invest in that? That was a terrible, that was stupid. But it's actually the stupid ideas, that end up being really, really good. And so that's a very long-winded way of saying sort of the contrarian, but right. But I would really caution if you want to make a living as an investor, you can probably do it getting singles, copying other investors. But if you really want to be the next great talent, you have to think differently.
So that means different hits, different songs, different genres.
Yeah.
What makes a great board member?
I would say there's like two types of board members. Board members that know more than you and board members that know less. And it doesn't necessarily mean like an aggregate, right? There could be a board member that knows more about this thing than you, but not that thing, and so on. The best board members are the ones that when they know more about you than something, and that's amazing, and they're helpful. And then they also know the second best are the ones that don't know more than you about something, and they don't try to be helpful. They recognize it. And the inverse is true. The worst board members are the ones that don't know anything, but try to be helpful. And so I think when you construct a board, no board member is going to know, unless he's Mark Andreessen. No board member is going to know more than you on everything. But if you can find that person, get him or her. But if you can construct, hey, this board member knows way more than me on this, and this board member knows way more than me on this, and you can kind of construct a board where, I have my people. I need product help. I go to Arjun. I need financial engineering help. I go to Joe, right? Or M&A help. I go to Andy. Like I have my people for the different things. And that's been very valuable. I need help on governance and IPO readiness. I go to Barbara. That's been super helpful to me.
We have some rapid fire questions as we close this out. So super short responses. Is AI overhyped or underhyped?
Underhyped. I was so against blockchain, and everybody was like, Henry, you should be in blockchain. And I didn't understand how it fit in our business. And I felt like an idiot for a long time. AI, I'm the opposite. We are all in.
When will the next big IPO year happen?
It certainly feels like things are gearing up this year. Our view is 2026 is going to be super exciting for IPOs. Everybody's gearing up this year for a 2026 opening.
Will San Francisco and Silicon Valley be the startup capital 4 years from now that it is currently?
Yes, even more so.
What is your favorite snack, treat, or candy?
Every morning I come in and I eat those Pocky chocolate sticks for breakfast with Hunter's laughing because he knows, and with my coffee, and everybody laughs at me. And I look, I lived in France for a couple of years. They eat chocolate for breakfast, and they think it's weird that we eat eggs. So no judgment.
But I've also heard you're a big ice cream fan.
I eat ice cream all the time, but my team somehow they got into it that it's like stress eating. It's not. I'll eat not stressed ice cream, but every once in a while, like if it's a really boring meeting and we're on Zoom, if it's work from home day, I'll bring ice cream and I'll just eat ice cream because I'm bored during this meeting. It's usually something with compliance or something, and then everybody thinks I'm stressed, but it's just I like ice cream.
Favorite place to travel to?
Anywhere in Southeast Asia. I just love the food and the culture and the people. That's my escape. And then my more local one is my son and I over COVID. He's 11. We got a little cabin in Tahoe, and in this winter we go skiing. That's our favorite thing to do. In the summer, it's just a fun place to be in the summer.
Awesome. Back to musicians. Favorite bands or musicians?
I mean, I'm Gen X, and I grew up in Michigan, so I think Eminem is the Shakespeare of our time, and
multi-platinum too.
Yeah, totally, and and just an amazing lyricist and writer. But people laugh when I say I think he's going to be Shakespeare of our generation. But at the time, Shakespeare was considered a common he wasn't Shakespeare. I mean, he was the working class writer that wrote about working class stuff. Or for the working class, and people relegated him to the bottom of the social stack. I think Eminem will be in 100 years will be seen as a genius.
Last two questions. Favorite movies?
My romantic side, Shakespeare in Love, and then my fun side is Snatch, the Brad Pitt movie.
Favorite leaders, historic or present?
I'm watching now the documentary on Netflix on Churchill. I've always found the guy fascinating, mostly because I love writing, and he was the Shakespeare of that generation. And then I can never get enough of Obama.
Henry, Neil and I really appreciate you taking the time to chat. You are definitely innovating and advancing venture capital and startups, and we wish you and the Carta team the very best.
Thank you so much, guys. Appreciate it. Thank you.